You trust and depend on this rally as we begin a new month. Let's ask the aforementioned Professor Siegel. He is with us today, as always, from Philadelphia. Professor, welcome back.
Happy to be here, Scott.
New month. Are we going to have the same story? Do you believe in this market right now?
Well, I think the market loves the, actually, I was surprised this talk about a pause or a skip. You can name it the way you want to. I think that's a major source of the rally today. As you know, I've been warning about the Fed going too far, the delayed effects of monetary policy accumulating for a downturn in the second half. If they can pause now, this lowers the probability that we're going to have a recession.
You think they're done? Is it just when you say pause, presumably you're suggesting, okay, they don't go in June, but that doesn't mean that they're fully done. And I think Fed members who've been speaking have been kind of going out of their way to make sure the markets are quite understanding of that.
Absolutely. I mean, they're totally data dependent. I mean, if inflation flares up again, or the labor market gets even tighter than it is, I mean, I thought it was pretty surprising that, you know, Harker Jefferson talked about it before tomorrow's employment report. I thought at least they would want to see what tomorrow's employment report would be before saying, well, it looked like we can pause. I think that was sort of encouraging. I think that means that Powell sort of made up his mind with the staff. Hey, this is a time for a pause. There may be just some dissents, Bullard and, there are Hawks and Mester. We may get our first dissent in a year and a half at the next meeting, but nonetheless, what the chairman wants, the chairman gets.
Yeah, well, that's for sure, we think. Swoon or surge this summer? What's your gut telling you, Professor?
I still worry about, I still think rates are too high to sustain good employment. And I think we're going to see a downturn, not this month, not tomorrow, but sometime we're going to see a downturn in payroll growth to a negative number. And that could give everyone a little bit of a scare. The year is still going to be up, but, I don't think a surge is in the works. Of course, AI can go much higher. We've seen this. What was it last year? 2 years ago, you added crypto to your name and you soared. 20 years ago, you added .com to your name and you soared. Now you add AI to your name, and that's the way to get the buyers in there. I mean, markets go through all those phases. I'm not going to say whether NVIDIA is a real company. It's not one of these .com companies, but certainly those sectors can catch fire, and that fire can continue through the summer.
Well, wait, so you say, you mentioned the .com bubble. Check, right? That was a bubble. Crypto, check, that was a bubble. We know that now, from where you were in Bitcoin, for example, to where it is today. Are you suggesting that these AI stocks are a bubble?
No, they're not there yet. I mean, they got real earnings. I mean, they got real earnings behind them. I'm not saying they're not eventually going to go too high, but I think we threw out a bubble way too easily. I mean, to me, a bubble is a stock that's 4 or 5 times above its fundamental values, and I don't think we're anywhere near that then. I think we were in the .com era. I think we were in the SPAC era. I think we were in some of the crypto areas, but not there yet on AI.